Yeah.
Okay, good evening, everyone. Thanks for joining us for this special meeting so that we can hear what the auditors have to say with regard to the 2024 audit. As we begin this meeting, I will ask that all present silence their cell phones and other electronic devices and remind council that our procedure bylaw prescribes the use of technology during council meetings. It is 5:01 p.m. I'll call this special meeting of council to order. The municipality of Brighton respectfully acknowledges that we are meeting on the shared treaty and traditional territories of the Mississauga, also known as the Mississauga Anishinaabe and the Williams Treaties First Nations. The lands and waters that make up our municipality have been and continue to be the collective responsibility of these Indigenous communities who have been their stewards and caretakers for generations. We recognize that this area is home to many Indigenous peoples from across the region and Canada. We honor their enduring connection to this land and their significant contributions to its history and culture. As we gather to make important decisions for our community, let us also reflect on our shared responsibility to foster relationships built on mutual respect and understanding, and to work together towards creating a more just and equitable society for all. I have a motion moved by Councillor McCausland, seconded by Councillor Wheeldon, that the January 26, 2026 special council meeting agenda be approved as presented. Is there any discussion? All in favor? Being none opposed, that motion's carried. Members of council, have you any declarations of interest? And if so, please state the general nature thereof. There are none noted. Topic of tonight's special council meeting is with regard to presentation by Baker Tilly, auditors for the 2024 audit, and I will ask the auditor to come forward, please.
Fancy. Maybe Thank you very much for having me here today, Mayor and Council. I'm Joanna Park. I am the engagement partner on the audit. I think, though, this might be the first time I've been here in person, so I'm happy to be here. I know last year I was away and my partner Richard did it, but ice storm prevented him from being in person too. So thanks very much for having me. Almost, but the weather didn't get me. We are presenting the December 31st, 2024 financial statements. So a little bit of history here, but we'll go through quickly. And if there's anything that comes up and you have any questions, feel free to just interrupt me. There's no point in waiting until the end if it's kind of a timely question. On the next slide, we do start, one thing I should say, this presentation that I'm going to go through in your packages, you have the financial statements and the post-audit letter, as well as the presentation. The presentation summarizes the other two documents, but of course, by all means, if you have any specific questions on those documents, happy to address them as well. We start with the auditor's report, and this is the really what you're getting at the end of the audit. You have your financial statements, which we do help you prepare, but what you want to see is the auditor's opinion. That's a few pages into the statements, and it's 2 or 3 pages long, and this is the paragraph you want to see, and it's our opinion paragraph. It says, in our opinion, the accompanying financial statements present fairly in all material respects the financial position of the municipality at December 31st, 2024. So that's a clean auditor's opinion. It does talk about Canadian public sector accounting standards, which you as a municipality have to follow. And it talks about consolidated financial statements because it's not just the operations of the municipality, it's also the library and the DBIA as well. So that's exactly what you want to see, a clean opinion. We're required to let council know what we do as part of our audit. We review council minutes, the open and the closed sessions, to make sure that anything that's related financially is reflected appropriately in your financial statements. We do lots of testing. We look at random sampling. We look at management's estimates. We do an analytical review of numbers to make sure we feel like they're reasonable. We look at the various systems, the money coming in, the money coming out, and adjusting entries to make sure if there's any internal control procedures that we feel like could be strengthened. happened. Just to give you that kind of fulsome internal controls, we give those recommendations. In a year where you've had staffing changes, it is difficult to do that. We do talk to the finance team for sure if we find things, but I expect next year, when it's kind of been the full year of the new complement, then we'll have some suggestions. We didn't see anything this year, though, that we felt need to bring to council's attention. The audit is complete pending council's approval of the financial statements. And once that happens, then there's a few things that have to happen. We have to get all the legal letters back. We send letters to your lawyers to ensure that anything that's legally related is represented in your statements if it's necessary, as well as then we ask management to sign a representation letter to just acknowledge that they've provided us all the information that we need to do our audit. There was no significant difficulties encountered during the audit. Obviously, there was time difference impacts just because of the changing of the team, but no disagreements or difficulties with management, no changes to our initial audit plan as to what we were going to audit, and excellent cooperation from the staff. So we really appreciate that, and it makes the audit just go that much smoother. The one thing I didn't put on the slide, which I should have, is there was a new handbook section this year, and that had to do with the how to account for revenue within the financial statements regarding performance obligations. So if there's a performance obligation, then in the past, it's just been recognized when the cash has been received, but now it has to be recognized while that performance obligation occurs. The biggest or only impact to the municipality was building permits. So previously, when someone purchased a building permit, all that revenue would get recognized, but then there would be many different inspections that had to happen. So now we're not very popular with, unfortunately, the building officials this year, but they had to go through and figure out how many building permits were open, figure out how many inspections that were left, and then therefore an amount had to be deferred and will be recognized as those inspections happened. It ended up to be about a $73,000 adjustment at the end of the day to your financial statements. There are some uncorrected audit differences there, and these are noted. We're required to let you know. None of these impacted our opinion on the financial statements. It's still a clean auditor's opinion, but we are required to let you know. Some of them had to do with just timing. For example, the pickleball court was completed in 2022, but the funding wasn't received until 2024, and it wasn't recognized until 2024. We didn't feel that it was necessary to go back and restate the 2022 statements. Of course, it's always council's prerogative to have us do that, but all in all, when you look at those items there, they did amount to a $372,000. Our overall materiality, or the number that we feel would impact decision-making on the financial statements, was $580,000. So we still felt like there was enough room there that it wasn't making the statements materially misstated, but they are. Some of it has to do with just timing and the team, the complement of the team over the years. Nothing that caused us any concerns or thought that there was a lack of internal controls. I think a lot of it just was timing. And we get into the numbers. So we show the relation or the comparatives 2020 to 2024. And then we try to show a little trend on the side there just so you can kind of see what's going on there. The biggest impact or overall change in your financial assets is your cash during the year. With all the capital being purchased during the year, that's a big impact on your cash position. And ideally, that's not a surprise to council there. There was also a large amount of payables, which we'll see on the next slide at the end of 2023, and they were all paid in 2024, which again would be a hit when you look at the cash position comparative year over year. Your accounts receivable, $2.3 million. That did decrease because there was a collection. You had your ISIP funding, and there was a big portion of it that you did obtain in 2024. The big things that are still left in that $2.3 million receivable balance is water and sewer. It's always going to be a large balance at the end of the year, the amount owing for the period there, HST, and then the rest of the ISIP funding are the big things in the receivables. Your taxes receivable, if I had one comment, this is probably, and I think it's completely a reflection on the change in staff, but this is the one thing that probably needs a little bit of focus and probably is in 2025, a little more of a focus. You can see that the balance went from just over 2 million to almost 3 million. The province looks at your percentage of your taxes receivable to your total amount billed in the year. In 2023, you were at 8.9%, and in 2024, you're at 11.9%. So it did increase by 3% there. The province likes to see something under 10%. So you're slightly over that. You've always been consistently under that, and I don't anticipate any issues. Part of it too, at the end of 2024, I believe there was the postal strike. So that I know was impacting a lot of municipalities as well. Not to make excuses. I'm just trying to explain why it could have happened. Inventory for resale, most of that is the niche, the niches in the columbarium. And then assets held for resale are amounts, the industrial land. So that gives you total financial assets of 14.7 million and a decrease from the year before, and that's going to come into play when we go further on in the presentation. The financial liabilities, amounts owing or the amounts on hand to be spent in future periods. Your accounts payable and accrued liabilities went from 5.1 million to 3.8 million. So again, that's part of the reason for that decrease in your cash. You paid out the amounts. And a lot of that decrease, most of it was developer deposits. There was about 1.2 million dollars that you had on hand in your bank that was decreased during the year for developments that happened during 2024. Your deferred revenue obligatory reserve funds, almost 5.5 million dollars. That's the amounts you have on hand to spend in future periods. Most of that 3.6 million is development charges, 1.8 for Canada Community Building Fund or gas tax, and then 55,000 in parkland fees. So that, again, that's the amounts you have on hand to spend in future. And then your deferred revenue other, again, that's funding that you've received that you can spend in the future. And most of that is OSIP funding, as well as some building permit money. Again, money's now being received, but being deferred until the inspections occur. Your long-term debt, you didn't have any change in that, just principal payments. Drawing that down each year. And then your asset retirement obligation is that new section that was talked about last year. That's the amount, most of it's gravel pits. So the amount that's estimated to be able to retire that asset when you are done with it. So an estimate about 1.9 million dollars for the gravel pits, and the rest is a little bit of asbestos in buildings. So your total financial liabilities are almost 18.9 million dollars.
I noticed in the report that that asset retirement has been on the books for a little while. Is there a timeline for when we're going to retire those?
Through you, Mayor. Not that I'm aware of. It is just an accounting policy, the requirement. That was a big issue when it came into play in 2023. The requirement was for you to just kind of quantify the liability, but not actually to do anything about it. So it's just so that, it's good for the users to be aware. For something like a gravel pit, I expect that you'll probably be using it for a number of years. For things like asbestos in buildings, as long as you don't disrupt it, then it's perfectly fine, again, to sit there for a number of years. The idea of the section is just to make users aware that there is that kind of floating liability out there, if council had to want to do something. But yeah, no requirement, especially through the accounting policy, that you have to do anything. On the next slide, we look at the net financial asset trends. So this takes the financial assets minus the total liabilities. And you can see this is where we see the decrease there. And a lot of that, or most of it, has to do with the decrease in cash. And that's just we're going to see the impact of the decrease in cash. And that's because of all the additions that have happened during the year in your capital assets. So, but as a result, then you do have an overall decrease in your net financial assets. And then your non-financial assets, your tangible capital assets, those are the assets that you have on hand that you use to provide your services. So your roads, your water and sewer, your buildings. And that's the net book value of those assets. So it's the historical cost minus the amortization or the expensing of those assets over their useful life. And you'll see a significant increase this year, and that's because you had additions of 11.3 million dollars, but the amortization or the expensing of those assets over their useful life was only 4.9 million to give you that increase of about 6 million dollars. And we'll see on the next slide what the additions were made up of. The only other non-financial assets you have being things that you can't easily convert into cash are the inventories of materials and supplies. And most of that's roads kind of inventory like salt and diesel, those kind of things. You're not out there to sell it. You're there to use it in your services. And your tangible capital asset additions of $11.3 million, kind of made up in these categories. Your land, your roads and bridges, and water and sewer, of course, were the biggest ones. There were included in these numbers $2.2 million in contributed capital for completed subdivisions, as well as the Loomis Bridge was a contributed asset as well. And it's good to look at a kind of a 5-year span of your capital asset additions versus the amortization. The importance of this is if you're only replacing your assets at the same rate on average as the amortization, then that's kind of where that capital deficit comes in, because of course, everything's costing more and more these days. So you really want to make sure you're replacing them at a greater rate, which we can see that you are significantly over the last 4 years, especially. So that's going to help you out in the long run, right? You see some councils who aren't doing the capital replacement, and then all of a sudden they've got to catch up, and that's kind of where you run into trouble. And then your accumulated surplus. So when you look at your financial statements, you're going to see a $94.88 million accumulated surplus. And this is kind of where it comes from. So of the $94.89 million, almost 83 million is already invested in capital assets. So you've already spent that money. That is the net book value minus the long-term debt associated with those assets, minus the asset retirement obligations, minus unfunded capital. And I think I'm going to start putting the unfunded capital, I think, on this page, because I think it's an important number to notice. You do have about $8.3 million in unfunded capital, primarily in the projects that were just completed this year, that just hasn't been financed. So whether it be debt, future rates, development charges is, I think, most of the case here. But as you get those development charges, then they will be allocated to those projects to start paying them down. So in 2023, that unfunded capital was 4.5 million, and it's increased to 8.3 during the year. And I'm sure council is aware of that, but I just think it's good to kind of point out, and it doesn't get forgotten about. But on the next line, you will see the municipality's operating surplus, and that nicely went increased by $2.1 million to $3,057,000 during the year. So you do have that operating surplus too that could be used to fund capital. And I know usually it's kind of when the projects are done that gets determined. The following lines are the library board accumulated surplus, as well as the DBIA, and then inventory held for resale is deducted from that amount. The second half of this slide is your reserves and reserve funds, and in total, about $8.9 million in reserves and reserve funds, a decrease of $205,000 that was used during the year for various projects.
I had a question, and it had to do with development charges, as you brought it up, and I was going to bring it up earlier. With our new development charges, we have a deferral kind of system now, right? How will that affect the budget going forward? As far as, builders, developers can kind of push them out a little bit farther to pay for all of those things. Will that make any kind of big impact on what we do here?
Through you, Mayor, I'll turn it over to your treasurer, director of finance, but I would suspect that it will just be more of a timing. So it would be keeping things unfunded for longer, and then once you get it in, then they will be financed. But I assume that
That's good. That's all.
Through you, Mayor, just to add a little, we just had a meeting regarding some of this stuff very recently, and I think one thing we'll have to see over time is the volume of developments that actually qualify for the deferrals, and what the materiality and the impact of those deferrals will be. How many will be deferred and how many will not be. But so, it's going to be a little bit of a wait and see. I think the good news is it is just a timing issue around cash collection. Any deferral will have interest applied to it as well. So, if it's received in 5 years, that is in terms of current dollars in 5 years as well.
And keeping in mind, we won't see that in an audit for a couple of years because we haven't seen a deferral yet hit the books.
No, that's good. I just wondered how I am down the pipe with all of the other things. I'm good.
Good question.
Thank you all.
Thank you. The following slide is a snapshot of your statement of operations. So looking at the total revenue and expenses compared to budget. What we do here, and it's a lot of numbers, but really the purpose of it is when you look at your statement of operations, it's going to show a budgeted surplus of $5.8 million. I know council didn't budget a surplus of $5.8 million, and it's just the difference between how you budget appropriately and then how it is reflected in the financial statements using PSAB. So a lot of it has to do with capital assets. So the amortization doesn't get included in your budget as a expense, but then the purchase of capital assets does show as an expense, and it's kind of the reverse on the PSAB financial statement. So if you look at the budget column and it does come down to zero, that's kind of reconciling how you do it versus the financial statements. The following slide is a snapshot just of the total revenues and expenses just over the year. So you can kind of see that it's been pretty consistent. You have a gap between your revenue and expenses because you do have capital revenue. And so that all gets recognized when you receive it. But then as it's being used for capital. So therefore the expense for those assets is being done over their useful life. So there's kind of the time difference there on how the revenue versus the expenses is being recorded. And then to get into the actual revenues, in total, you'd budgeted $27.5 million. Your actual came into about $26.66 million. 49.2% of your revenue is coming from the property taxation. It was up over budget, and that's because of the net supplementary taxation being more than you budgeted for. Your user charges about 22.6%. It's about $6 million, and about 4.2 of that is water and sewer. The other amounts would be your planning and zoning, your rec facilities, that kind of thing in there as well. Your Government of Canada and your provincial funding, that a lot of that has to do with your ISIP funding for Main Street. And OMPF is about 1.25 million of that, as well as the funding for the pickleball court that should have been recognized a few years ago. Other amounts on here, you have penalties and interest on taxes. The only upside to having outstanding taxation is the fact that your penalties and interest do go up. And then the contributed tangible capital assets show here as revenue of $2.2 million, and that's the subdivisions as well as the Loomis Bridge. And then the other big amount on here is the development charges earned. So that's the amounts actually spent, almost $1.5 million. So not what was collected, but what was actually spent on the projects, giving you the $26.6 million in revenue. And then we're required to show expenses two ways. The first way is by more department. In total, you had budgeted 21.7 million. The actual was 21.4 million, so pretty close to budget there. Your largest expenditure department is transportation, is no surprise, and followed up by your protection. There was nothing. I kind of looked through to see if there was any variances. The biggest one is in environmental services, and that was a budgeted positions that just weren't filled through the entire year. But everything else, was kind of small puts and takes throughout the amounts. And if we look at the next slide, that's kind of the type of expenses. So you kind of feel this one a little bit better. The numbers at the bottom, if I did my job correctly, are the same as they were on the previous slide. But you can see salary and benefits being under budget there, but being your largest component of your expenses, and then materials and contracted services. Sometimes contracted services will vary from budget, and it will just depend on whether items are capital or not. So it's kind of, some years it's capital, sometimes it gets pulled out and then goes onto your capital assets, and some years it's not. So, and that is the end of my presentation.
Questions from members of council? I will note for the record that Councillor Butwell entered the chamber at 5:22 p.m. Well, thank you very much, Ms. Park. Appreciate it. I have a motion moved by Councillor Wheeldon and seconded by Councillor McCausland that council receive the presentation from Baker Tilly, KDN LLP, regarding the independent auditor's report for the 2024 financial statements, and that council approve the 2024 audited financial statements as presented by Baker Tilly, KDN LLP, and authorizes the mayor and the CAO to sign the management report on behalf of the municipality. Is there any discussion? Go ahead, Councillor Rowley.
Thank you, Mayor. Just one question. Regarding the library and the DBIA, will they also get presentations based on their audit, or have they? I don't know that the DBIA has at this stage. Just looks like they're doing okay. Just was wondering.
Through you, Mayor. The library did, and those financial statements have already been approved. The DBIA has not. Traditionally, we haven't presented, but happy to do so if they would like. Okay, great.
Thank you. Anyone else before Joanna sits down? I have a quick question, actually. It's just by way of information question. How much is AI being used now by auditors? And I was thinking when you were talking about going through all of the minutes, both closed session, like that's the kind of thing I would think you could dump into AI and say, hey, find us all the financial instruments in here.
Good question, and one that is constantly being talked about in our office anyway. Our IT people are very strict about our information because we want to protect your data. We have a lot of data that, so right now, we're not using it for any client-specific data because we don't want it to get out there and in the public space. I have been playing around, though, with public minutes because, of course, it's public documentation, so I haven't been happy yet with it, but I'm hoping in the next couple of months we will, because that you can only imagine how long that takes for us. Not that your minutes aren't lovely, but for us to go through that to make sure we see all the financial information for sure.
It takes long enough when we go through them on a bi-weekly basis, never mind if you just get dumped a year's worth of them. So I appreciate the answer.
We use a lot of data analytics now, though, so we can take all the information that's on a separate server, and then we can kind of slice and dice the information a little bit more, and it will pull our random samples. So they really, truly are random. So we do use it as much as possible that way for sure.
Thank you.
Thanks.
Anyone else? Any further discussion on the motion? All those in favor? There being none opposed, that motion's carried. Thank you, Ms. Park, for joining us, making the drive to Brighton on what might have been a not so nice day on the roads. We appreciate it very much. That brings us to question period. There is no one else in the gallery other than the auditor, and I assume there's no one online for that purpose. I have a motion moved by Councillor Rowley, seconded by Councillor McCausland, that council gives a bylaw its first, second, and third reading, and finally passes on this date, being a bylaw to confirm the proceedings of the Corporation of the Municipality of Brighton Special Council meeting held on January 26, 2026. Is there any discussion? All in favor? Being none opposed, that motion's carried. And a motion moved by Councillor Rowley, seconded by Councillor Wheeldon, that the January 26, 2026 Special Council meeting adjourn at 5:27 p.m. Is there any discussion? All those in favor? Being none opposed, that motion's carried. And our regular planning meeting will proceed at 5:30. So we'll see everybody in an hour. Thank you. Pardon me, 6:30. All right, good evening, everybody. Before we begin, I'll remind everyone in the room to please silence cell phones and other electronic devices. It is 6:30 PM. I'll call this council planning meeting to order. At our earlier special meeting this evening, I formally read, territorial land acknowledgement. As we now proceed with this regular planning meeting, I wish to briefly remind council and the public that the acknowledgement is not only ceremonial, but reflects our ongoing treaty obligations and responsibilities. The lands and waters within the municipality of Brighton are subject to treaty relationships that continue today, and these relationships call on us to govern, plan, and make decisions with respect, good faith, and an understanding of our shared stewardship responsibilities. As we consider planning matters this evening, may we keep these principles in mind. I have a motion moved by Councillor Rowley, seconded by Deputy Mayor Anderson, that council approve the January 26, 2026 planning meeting agenda as presented. Is there any discussion? Those in favor? There being none opposed, that motion's carried. Members of council, have you any declarations of interest? And if so, please state the general nature thereof. There are none noted. We have no delegations listed this evening. That takes us to our statutory public meeting with a motion moved by Councillor Rowley, seconded by Deputy Mayor Anderson, that council move into the statutory public meeting January 26, 2026 at 6:31 PM. Is there any discussion? All in favor? Any opposed? That motion's carried.